Before we get started with all the topics, maybe give the viewers and the listeners that haven't come across your content or haven't seen the first episode of us a quick overview of like who you are, what you're doing, and especially why you're excited about Bitcoin.
Yeah, certainly. So I think last time I was on your show was around late December of 2024, last year. And at that time, I was still in a fiat job, hadn't really broken free at that point in time, but I was definitely considering it. My background is that I am Canadian. I've been living in Europe for over 13 years now. I'm based here in Copenhagen, Denmark. And my background is in strategy consulting. I worked with large international consultancies. I also worked in corporate strategy at very large international businesses here in Europe. And I've been into Bitcoin since 2013, late 2012, early 2013, while I was living in Berlin. Was fascinated by it, bought into the long-term, the ethos and the long-term vision, but failed to kind of self-custody in the right way. I was with Mt. Gox, and I was a victim of the Mt. Gox hack. So that kind of put me back on the sidelines for a few years. But starting in 2017, started kind of building conviction and getting deeper into the Bitcoin space again from that point forward. And I'd say for the last 3 or 4 years, it's just been kind of all I think about again, all I talk about, and decided earlier this year to start my own business in this space. So in April of 2025, I founded Orange Wheel, which was initially just myself as an independent consultant focusing on bringing Bitcoin strategies to the corporate landscape. I've since been joined by a few colleagues, and it's been very exciting. No regrets in terms of that decision. It's been a lot of fun. I've been focusing also on getting to lots of conferences. So I actually had the privilege of meeting you in person, coincidentally, at the hotel in Prague last month. You are definitely taller in person than you seem. So that was a bit of a shock. But no, it's been great. I've been to Prague. I've been to Cheat Code in the UK. I've been to Strategy in Orlando, picked up this nice mug while I was there. So really trying to get primarily into the Bitcoin space, but more specifically into the corporate adoption of Bitcoin arena. So kind of having one world in the Bitcoin space and also having another foot in the kind of traditional corporate strategy world, and trying to kind of bridge those two communities together in a certain way.
Yeah, I do my best to communicate that I'm tall now, so I hope that people are no longer surprised. But I think you have a long way to do on the marketing side, that actually people are like, oh yeah, you're actually tall. But besides from that, it's super interesting also from Mt. Gox, and I think you don't get enough, like, people that lost a lot of Bitcoin or like get screwed over early on, they don't get enough credit for like getting back into Bitcoin, because there are a lot of people that kind of lost Bitcoin or they kind of got screwed over, and there was a lot of scams. There's still a lot of scams with Bitcoin going on. And if you have the first touch point with, I don't know, a scam, a rug pull, or like Mt. Gox and all those things, you kind of you have a harder way to coming back in. And you kind of have to jump over that of like, oh yeah, like this was the one thing, and Bitcoin is the separate thing. It's not FTX, it's not Celsius, it's not Mt. Gox. Bitcoin is a protocol, and you kind of have to separate that from that. So that big kudos to you. Like, I think a lot of people are still on the sidelines that say, I got screwed over. Like, fuck that shit.
Yeah, and I think definitely in my mind, I knew that I didn't conflict the Bitcoin from the intermediary. I mean, I understood that issue. I think from my personal perspective, it was more just my own identity had been kind of locked in with this, and then had been kind of humiliated, right? So it was kind of like to be that guy who had lost a pile of Bitcoin after being like evangelizing it for a number of years, right? So it was a bit more of that kind of identity issue in my case, that really is this something I want to associate my identity with, given this event in the past. I think that's really what, and the humiliation and a bit of shame that went along with that, as opposed to really the lack of understanding about where the failure was in the system. Yeah.
I think it's a thing that we can look at something be proud of. Actually, it's like that ego death that you come over with and you learn something. I mean, of course, it's better to not lose your Bitcoin and actually not do this. But I think early on, like I haven't talked with anyone. I mean, maybe they also make it up, but I haven't talked with anyone that went into Bitcoin early on. Let's say before, like, I don't know, 2019, 18, 17, something like that, before those eras, and they haven't lost any of their Bitcoin. Like most of them have lost some, and it's almost inevitable. I feel like.
Yeah, it's a rite of passage almost, right? I think you have to kind of take some pain and damage and learn your lessons the hard way to really become a firm, like, believer in a way. So,
what is actually what made you actually like? Was there a point where Bitcoin was so, like, there was a point or like a story or like a thing that you've learned that you're like, oh shit, I really have to learn this thing harder, and you really go all in, that made you really serious about Bitcoin? Was there something that you like, okay, that's it, or was it just like over time that kind of got you to be a firm believer?
I think what it was is early on in 2012, 2013, when I first discovered and got into it, it was always this kind of understanding that our current system is flawed in a way, but it was always more hypothetical that at some point it was going to end. It was always like a bit more of a dream, that this could in some potential future overtake fiat, right? But I think what has happened just gradually through time is you realize, yes, the current system is super fragile. It's reaching its like endpoint. You can see it kind of unraveling, and the problems it's facing in so many different dimensions. And the fact that Bitcoin continued to grow and develop despite all the animosity and attacks and everything, right? So I think that at a certain point, it just became, okay, this is not just a hypothetical thing. This is actually a thing that is definitely going to happen in our lifetimes. And it's not only going to happen, it is happening, right? It's a bit more like we are actually within the process itself. And also the kind of the unstoppability aspect of it, right? The fact that, there's always those potential cases of like governments coordinating to stop it, hijacking the mining infrastructure, co-opting the system. And then you realize over time that, it's gotten so big, so decentralized, so broadly accepted that it's not really stoppable in a way. And even like what we're seeing now with, governments and corporations adopting it. I know some maxis are kind of like, well, this is like they're co-opting the system that goes against the ethos of what Bitcoin stands for. And from my perspective, no, this is exactly how Bitcoin wins, is through integration with the existing system. And then that's how the value and wealth is transferred from one system to the others, through this kind of like interesting kind of yin yang symbiosis almost.
It's an interesting thing where when we have the, let's say, treasury companies, the ETF, the financial products on top of Bitcoin, basically, and let's say just Bitcoin financial IOUs that you can have, and it is something there where a lot of people actually go in and say like, hey, like that's actually something where I can accumulate more Bitcoin over time because it's faster than Bitcoin, or I can buy in because my retirement account doesn't allow me to buy direct Bitcoin, so I have that exposure. So there are many different reasons why people buy it. But it's an interesting discussion of like, is it a Trojan horse for Bitcoin in the sense where they're trying to get people out of self-custody and into these products? Or is it maybe even the other way around, where it's kind of a gateway drug to Bitcoin for the financial system, which you can make the case for both sides. I think Bitcoin is strong enough to be a gateway drug for everyone, and it's a natural progress. But how do you look at those opposing views?
Yeah, I think they're both right, to be honest. I mean, I think there's, and again, that yin yang kind of metaphor maybe is a good one, but like, I think there's going to be a lot of people who get their first exposure to Bitcoin by way of these proxy instruments. So it is that kind of gateway drug, and some people are also going to come in through stable coins and other ways in, right? So I certainly believe in that. I think on the other side, it's the only major risk I see is, again, we're introducing counterparties, and you're again trusting your kind of, in a way, trusting your keys with somebody else. And these also become pretty large honeypots, right? The Coinbase custody, I mean, they seem to custody all the major ETFs besides Fidelity. MicroStrategy, I'm sure they're using multiple different custodian solutions, but still, it's so much Bitcoin that each individual custodian is probably a pretty large honeypot unto itself. And of course, in a certain crazy situation like the 6102, it could be that the government goes to Michael Saylor or to Coinbase, to Brian Armstrong, and says, listen, we have to confiscate the Bitcoin, right? So those are all new risk factors that are introduced, but there's inherently going to be that trade-off between the ability to the advantages that come through, I guess, more widespread access, and the downside of then introducing counterparty risks that are associated with that.
Interesting. What's your overall take on Bitcoin treasury companies and the corporate adoption? It seems to have started obviously with Saylor in 2020 and really got going, I would say, around a year ago, where it really kind of accelerated and was in the public eye, in the Bitcoin public eye, I would say. So what's your take on that?
Yeah, it's fascinating. I mean, I think the MicroStrategy story is one that's fascinating. I think Saylor himself has been kind of evolving his thinking through time as well. I do believe, early on in 2020, 2021, it was more of a arbitrage on the fact that there wasn't an ETF available on US exchanges at that time. But then when the ETFs became accessible, he kind of leveled up and found new additional ways to differentiate by means of financial engineering. And I think the great lesson that sort of came out of this is the idea that, he was in a position that I think many companies find themselves in business leaders find themselves in, where they work themselves to death, trying to find a way to kind of generate positive real returns for their business, and struggle and just cannot really do it, right? And I think that's systemic. That's a systemic issue that's a result of the manipulated financial markets through central banks manipulating the cost of capital and suppressing it lower and lower to be able to try to stimulate additional growth, which is necessitated by our kind of debt-based monetary system. We can definitely go into that, but I think as a result, you have a lot of companies that are really not necessarily, or really, really struggling just to kind of stay still, because, and there's many even more companies that are like failing to deliver real value in real terms. And Bitcoin kind of comes in and shows, okay, this is actually the true cost of capital now. And I think it's just super cool that there's now this incentive for all different kind of capital allocators to allocate capital to Bitcoin, and in a way that makes Bitcoin stronger, but it also is like kind of resolving the issue that we're kind of seeing in our system, where capital is otherwise being put towards value destroying instruments and purposes. Okay, so I went on a little bit of a thing there, but anyways, Bitcoin treasury companies. It's the first instance where we really saw corporations, I guess is what I'm trying to say, is like corporations reallocating capital towards this. And there's kind of opens up people's eyes in terms of this new phrase that's kind of permeating, being like Bitcoin is the hurdle rate. And, what does that really mean in real practical implications? Now, I think most of the corporate world hasn't really yet picked up on the huge implications of what that really would portend for all corporations and all capital allocators. But to kind of take a step back, where I think most of the world is at, is they're just seeing, okay, if we kind of replicate the MicroStrategy playbook in our own respective capital markets, we too can see stock prices go up, and at least for a period of time, beat Bitcoin itself through. And I guess, there's lots of different theories as to exactly why that is happening. I think it's a combination of regulatory arbitrage. As we said, certain institutional investors cannot allocate to Bitcoin, or Bitcoin ETFs need to invest them into their domestic markets. There could be tax implications that make it more reasonable for companies to choose that instrument, or institutional investors to choose that instrument rather than another. There's also the retail hype that kind of goes into it, that also kind of creates additional price action, which then can be used to kind of issue more equity and then acquire more Bitcoin. So it's a fairly complicated financial engineering mechanism, this kind of flywheel that can be generated. My perspective on it is that I think this is a moment in time. where like they're providing a purpose, like a function of in a certain way, where they're kind of acting as vessels for taking kind of trapped capital and getting it indirect exposure to Bitcoin within their respective capital markets. But at some point, these regulatory arbitrages will diminish, and the speculative fervor from the retail community will also kind of, we're already seeing it, I think, being diluted across all these different Bitcoin treasury companies. So becoming a little bit like shitcoins in that regard, right? Like, where people can kind of jump from one to the other, try to catch the spike, then pull out. So I think this flywheel, as interesting as it is, and I think it's valuable as a sort of service that they are providing, I don't think they're going to be in perpetually able to beat the Bitcoin hurdle rate. At least not kind of all of them, unless, I think there's some wild cards in here, right? Unless they can kind of develop some financial type services around Bitcoin. But then you're introducing like kind of fiat type risks again, right? Like in the Bitcoin lending services and these sorts of things. So again, I think it's a valuable phase. I don't think this is, I think what I hope the risk is that does not happen is that people see this big bubble forming, and then a kind of a crash in the stock prices of these Bitcoin treasury companies, quote unquote, and then feel like, okay, corporate adoption of Bitcoin just doesn't make sense. It was a big bubble and now it's popped, right? Because I think the more interesting story, or maybe not more interesting, but the more broad story, I think, is going to come after that, where every company ultimately becomes a Bitcoin treasury company, but accumulates Bitcoin through its own operations and through value delivering functions or operations or activities, economic activities that deliver value for the equity holders, not exclusively through financial engineering and kind of playing the stock market, right? So it's very fascinating. It's like, I think this is all part of what I kind of call the monetary transition that we're living through, kind of moving from fiat to Bitcoin as the fundamental monetary base layer. And I think once we're on the Bitcoin standard, it's going to be great, but it's also going to be kind of boring. I think we're going to know how it works. It's actually going to be a very much cleaner, simpler type of economics that will work. We won't have to deal with like nominal interest rates, real interest rates, all this sort of stuff. It'll simply be, if you can get more Bitcoin out than you put in, it's a positive economic value adding activity, right? But moving from the current system to the new system is when I think things are very just fascinating in that change of regimes. And you see it in physics too, right? When you kind of move from like laminar flow to turbulent flow, you have that transition period where things are really chaotic and unpredictable. And I think that's what's going to make, the time we're living in now in the next 20, 30 years, particularly interesting. And there's a lot that goes into it. We're going to see this we're already seeing this kind of like arbitrage between the fiat system, people who kind of already moved into thinking on a Bitcoin standard from an investor perspective, are able to basically short the fiat system and long the Bitcoin system. And it's just super exciting to see how it's playing out. And I used to think that I always have these kind of fears that maybe the transition will happen too rapidly. Maybe there'll be a point in time where everybody wakes up and wants to get Bitcoin, and then Bitcoin price just skyrockets, and it's just panic and chaos and pandemonium. But the more I've kind of been investigating it and talking to people who are in the kind of more traditional financial world, I'm more convinced now that it's going to be a fairly gradual transition from one to the other. I think there's going to be older people in general as well who still just want yield in fiat. And eventually that generation will kind of die out, but at least for the time being, they're much more comfortable in getting that. And then as long as there's enough people who still want fiat yield, there's going to be demand for somebody willing to take that other trade, who's basically going long the fiat system and getting whatever it is, 5, 6, 7, 8, 9, 10% out in fiat. And that capital can then be reallocated to Bitcoin. So, yeah, I think, sorry, I've kind of rambled on for a while, but but I think where some Bitcoiners, where I get a little bit maybe divergent views from them is that I think, and I think Michael Saylor also falls into this camp, right? Where they're kind of like, there will always be fiat there to play this arbitrage. And I think ultimately it will close. We will be on a Bitcoin standard. Nobody will really want to accept fiat unless governments coerce them to do so. But what that will also imply is I don't think there's any real way to kind of get yield. I think so much of our current system is based on, the fact that there's new units being created enables the ability to have kind of like just living off of, investment income. I don't think that's going to be as easy to do once we're on a Bitcoin standard, because like Bitcoin's finite. It will take like real economic value adding activities to be able to, procure more Bitcoin than you put into the system. So things like money market funds, I think a lot of things that are just purely yield generating, there'll be less of that. But on the other hand, folks will increase their purchasing power simply by holding Bitcoin. So just moving from that mindset shift from wanting to see the number go up and to kind of get like, a percentage increase in your stack of fiat every year versus actually seeing, to a certain extent, you have to actually see your Bitcoin number go down if you're retired and you're living off your stack. But your purchasing power is maintaining the same or probably even growing, even, depending on how much you're spending to maintain your lifestyle. So I think it's a huge like shift we're going to have to go through, but it's going to take us, a couple decades to kind of get there. And we're going to kind of see different investor segments. I just put it this way, gradually more investors and more stewards of capital will move into the Bitcoin standard way of thinking. But I don't see it happening as a switch going on and off. It's going to be a kind of gradual transition.
Yeah, it's interesting. And there was a lot in there, but I want to start off with a very important digestion that you made, a difference between Bitcoin companies that just put their Bitcoin on the balance sheet just to have Bitcoin on the balance sheet, which I think every company will be at some point. And then there's also this financial games that you can play on top of the stock market, the equity market, bond market, fixed income, all of those kind of markets where you can play into those and play fiat games to get more Bitcoin. So those are generally two main differences. And I think there are some people that kind of criticize treasury companies, and those are usually on that side, they play the fiat games. I think no Bitcoiner would oppose a company holding Bitcoin instead of US dollars. Like, I don't know how you can logically be a Bitcoin maxi and argue against a corporation holding Bitcoin versus US dollar. Like, I don't see that. So if we think about financial services, or like if we think about, okay, how can a company accumulate more Bitcoin over time without fiat games, and then with that basically outperforming Bitcoin, it's very easy. You just have to set Bitcoin as your standard and set that as your treasury. And then on top of that, you provide services or products profitably. And then you can get more Bitcoin because you get paid for your products and services. The same way that I am, as an individual, outperforming Bitcoin every year. Because every month I get a little bit more Satoshis for the work I'm doing. And I also save everything in Bitcoin. So my purchasing power grows faster than the purchasing power of Bitcoin. It's a logical thing in my side, and a very natural thing to happen also for companies. The other side is very interesting because there can be some bubbly activities happening, and we already see, and I wanted to show you this graph actually, that strategies is really on the way up of the big companies. Let me quickly share this with you and get your take on this. We basically see the Bitcoin holdings of Strategy being already quite high compared to the big players, obviously, Berkshire Hathaway, Amazon, Google, they're like a lot bigger still. Like they are. It's quite some time till we get there, but it's not that far away. It's fascinating that we already like outperformed Nvidia on that chart from the cash holdings. Berkshire Hathaway, like they're just crazy with like 400 billion. And there's like how much more, like 5 times more than Strategy. That's crazy how much cash they hold. So in my view, this could be Strategy could have a chance of being kind of the new Warren Buffett, and Strategy being the new Berkshire Hathaway, because they're not as big, because they are providing something with Meta, like a Facebook, or something like Google with the services they're doing, rather playing the system. And I made that comparison of making Berkshire Hathaway the result of a fiat world, and Strategy the result of like Bitcoin world, even though they're using the fiat system to get there. So it's an interesting thing. How do you look at that?
Yeah, I mean, I think it's an interesting analogy, certainly in terms of like their ability to grow.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.